ladies and gentlemen, it's Sam HTLFX in another video. So today, of course, it's gonna be a recap for today beautiful trade, and second thing, it's gonna be a recap for this week. Yes, for this week. So as you can see here, we are on the daily time frame, and we know that the market was still bearish. Okay, bearish order flow. Actually, when you see a bearish trend, you say bearish order flow. So if you're into this complex things, go watch the ICT video, order flow, or the footprint. If you wanna to go deeper, you know what I'm saying. But for me, when I watched their video, the video of ICT, I get the conclusion that if it's a bearish trend, it's a bearish order flow. It's a bullish trend, it's a bullish order flow. All right, but it's more complex. As you can see, this footprint number and other wick, like when you see zero and another number, that when you see zero, market is gonna reverse. You know, complex stuff. All right, so okay, now we're in business. All right, let's get started. So as you can see here, the market get this low, then get this SSI liquidity, and get this SSI liquidity. And here it showed that we have a change of statement. Okay, that the market start from change the statement from bearish, program to buy program. We have a beautiful breaker right here. So as you can see here, trade higher, trade lower, break below, take this liquidity, which is the total soup, and trade higher and close above this high, and trade lower. This is the CPI news right here. You see this move. So here we don't know. We don't know if the market is gonna trade higher or keep trading lower. But for me, we are bearish. I know that the market need to get this SSI liquidity, and keep trading lower. All right, because we know that the dollar, they keep rising the rate. So Jim Powell, I don't know, the Fed did not talk for the FOMC and the federal meeting. We don't know because we have the war, like Israel and Palestine war. So, but we don't know. And yeah, that's why we see that, wait a minute, we see that the gold keep pushing higher, of course, because look at this daily, look at this today move, look at this, beautiful. Wait a minute, I'm gonna measure it. Look at this, damn, 650 41 pips. Wow, beautiful push to the upside. So when the gold rise, we have a war. When you see war, we have gold rise, like gold push. You know what I'm saying? Because I think people all change their currency and buy gold in war. That's why gold push. And yeah, let's back to the EURUSD. And by the way, we know that. We know that when the dollar trade higher, what's gonna happen to gold? Trade lower. And look at this. The dollar trade higher, the gold trade higher. You know what I'm saying? So that's why this is the result of war. People buy gold on war. So put it in your mind. Write it. All right. And here it's a normal thing. When the dollar goes up, the other currency against the dollar goes down. So look at this. Dollar go up, euro go down. Dollar go up, gold go down. But here's the problem: gold go up. We know it's war. Okay, that's what happened in war. So as you can see here, the next week I'm looking that the market is gonna trade lower to get this SSI liquidity and this SSI liquidity. And I don't know, maybe it's gonna trade higher. But here's the thing: we have another fair value gap that changed to inversion fair value gap, as you can see here. From a fair value gap, didn't respect it. Okay, break above it, respect it as an inversion fair value gap and trade higher to get this buy side liquidity. All right, as you can see here, market respect this inversion fair value gap, okay, and trade higher. But here's the thing, market CPI news trade lower, and today, which is Friday, trade lower. But now we need to wait till this candle, I mean the next week, to close below this inversion for value gap. And when the market, wait a minute, when the market closed below this inversion for value gap, is going to change to repair inversion for value gap. So this is what's going to happen. Market trade higher, then boom, trade lower. And this is going to change to repair inversion for value gap. All right, so that's it. Okay, now what I'm looking for is that the market's going to trade higher to this for value gap, okay, or this CB trade here, then down. It's the same like this. Look at this, we have the same concept here, okay, look at this, boom boom. So where is Friday? Okay, as you can see, this candle is Friday, this candle is Friday. So market trade higher, touch, mitigate or touch this or balance this imbalance and trade lower, okay. And we have another example, we have this as an example right here. Look at this, beautiful, beautiful for value gap. What happened? Market, okay, this is Friday, I think, yes, we have the same example. Look at this candle and look at this candle, okay. Friday, the next week, trade higher, reach that level and balance this imbalance and trade lower. We have the same thing right here, so that's what I'm expecting for the next week. All right, and yeah, so as you can see, this for value gap, we're waiting, we will see what's gonna happen. So now let's go dive, wait a minute, I'm gonna put this first. Now let's dive to the lower time frame. Let's go to 4-hour. Okay, as you can see, this is the 4-hour, but before I'm gonna mark up the weekly open. So where's the weekly open? This is the Monday. Okay, this is the weekly open. Okay, beautiful. So as you can see here, look at this. Trade higher, no, trade lower, then trade higher, then trade higher, trade higher, and trade lower. Close below the weekly open, trade higher, respect this week open, and trade lower. Okay, beautiful. So now let's go to the 4-hour time frame, as you can see here. And by the way, when you, before watching this video, go watch the previous video, because we have a gap right here. You see this gap? I took a trade here at this gap. I still remember I took a buy, you know, it was a beautiful buy, and targeting this equal highs. You can see this equal highs right here, targeting this equal highs. It was a beautiful trade on Tuesday. Okay, so go watch the previous video. It's, you know, you're gonna understand what I'm saying now. So yeah, market trade lower, I mean trade higher, then trade lower. So create the low of the week. I mean, forget this, forget this area right here, from here and here, forget it. All right. So then create the high, the low of the week. Then stop trading lower, close above the weekly open. So now we need just to look for buys. And here the second thing, close above this gap. You see this gap? Market close above it, so the market need to go down and reach it, then trade higher. So I still remember I took a buy right here, you know, right here, targeting this equal highs. You know what I'm saying? This equal highs, it was a beautiful trade. Go watch my previous video, you can understand how I took this trade. So yeah, let me delete this. So, and after that, Wednesday, I was looking and predicting, wait a minute, daily time frame. So as you can see here, Wednesday, I was looking and predicting that the market's going to create the high of the week on Wednesday. And as you can see here, market did not accept that. Why? Because Sam know the logic, and they said no, no, Sam, not every day. So market didn't create the high of the week on Wednesday, so it created on Thursday, and I lost here two trade. So one trade win a trade on Tuesday, two trade loss on Wednesday, and I did not trade Thursday because my trade did not triggered. I'm gonna show you why my trade did not triggered on Thursday. Here it was the CPI news, okay, and me, I still remember I was using the 30-minute time frame, okay. Then I saw that here. Look at this. The market create beautiful for value gap, okay. Saw beautiful CB, and I put my trade, my sell limit right here, okay. And then look at this. Look at this. Stop loss right here, above here. And look at this. What happened? Okay, we need to zoom in a minute. Actually, no, it triggered. Sorry. It was the 15-minute time frame. Okay, wait a minute. Okay, the 15. Yeah. The 15-minute time frame. Look at what I was waiting that the market's gonna reach this fair value gap here. Why? Because we have a beautiful breaker. Okay, we have this breaker right here. So that's what I'm looking for, that the market's gonna reach this fair value gap inside the breaker, which is the unicorn model. I like using this model. It's an ICT model. So I was putting my sell limit right here, and yeah, and I was waiting to target this low. Wait a minute, this low and this low. So yeah, and market did not reach my sell limit, and boom, CPI news melt. Okay, so it is what it is. I did not trade for Thursday, so let's move to Friday trade. Okay, wait a minute, I'm gonna put this here. Let's get the 1 hour time frame. So this is Friday. Okay, market trade higher. Wait a minute, I'm gonna put, what is it, 19? Okay, from here to here. So this is the shadow range. All right, I'm gonna delete this. No, okay. So this is the shadow range. Market trade higher, took the high of the shadow range, then boom, trade lower without taking the low of the shadow range. All right, as you can see here. So this is the true day. This is the true day, ladies and gentlemen. So wait a minute, I'm gonna delete this weekly open. So we know that market trade higher, respect the week open, then trade lower. Okay, this is the true day. Okay, so market reach this high, so this is the best range to sell. All right, okay, reach the high, and we have a beautiful order block right here. So it's gonna be a beautiful framework, to, let's say, to use it like, I don't know how to explain that, to use it like a confirmation. But the confirmation, this is for a risky trader. For me, before I was trade like that, you know what I'm saying, without looking at, confluence, or without looking at price action, you know what I'm saying, or without looking at some confirmation. I was taking trade like this using logic, some daily fractal or the weekly fractal. So we have a beautiful framework, boom, touch it. But now I was looking for confirmation, and the confirmation is here. After taking the low of the shadow range, we create a beautiful fair value gap. Okay, let me delete this. And actually, I don't want to take this trade. Why? Because I believe that the best trade is above the weekly, the midnight open, or let's say the true day open. So when I saw that the market respect this fair value gap, or let's say this CB, and the market respect this consequence encroachment for this CB, I said, all right, I think that I'm gonna take a trade, and I did. I took the trade right here, as you can see here. This is the trade. When I saw that the market, this candle closed respecting this consequence encroachment, I said, okay, I should take a trade. I took a trade right here. Stop loss was high here. You know what I'm saying? So wait a minute. Stop loss was right here, and the trade was right here. And yeah, TP, I was targeting this low. Wait a minute. I was targeting this low. This is liquidity. But I closed my trade right here because I saw that, this move, or let's say this volume, increase. Okay, as you can see here, look at this candle close with the small body, and now this is the you need to learn the language of candle. So here, candle talking with us. All right, you can see here, big candle, there is volume, big candle. Here, big candle, and now the candle start being smaller. What does mean that the market is gonna reverse? Okay, so that's it. This is, you need to know the language of candlestick, and it's gonna help you and on the price action. You know what I'm saying? So yeah, that's it. Move stop loss to break even. Stop. I took profit here at 33 pips, and it was beautiful trade. So this is how I took my trade. And by the way, for people who want to trade the ICT model, or people who trade ICT, so there is beautiful model right here. As you can see, it's not a model, it's a tool, and the model at the same time. Look at this, we have a breaker right here. Okay, this is a breaker minus sign. Why? Because it's changing of statement from buy program to sell program. So now you're gonna enter your trade at the threshold of this breaker. Okay, look at this. Look at this threshold of this breaker, and look at the consequence encroachment of the fair value gap. Okay, let me extend this. Okay, now look at this fair value gap. You see this fair value gap from here, the previous fair value gap. Look at this consequence encroachment. It's overlapping, kind of overlapping with this threshold, the threshold. You know what I'm saying? ICT call it threshold. I don't know. You make it shorter, but it's the threshold, and ICT call it threshold. Kind of, I don't know, because he speaks too fast. So that's it. And this is the threshold, ICT, Michael. So when I say ICT, which is Michael, and this is the consequence encroachment. So you see, overlapping. And here's the thing. Look at this. Candle tell the story, wicks make the damage. You see the body respect did not close above the consequence encroachment or the threshold of the breaker. So beautiful. All right. This is about the breaker. For people who trade the breaker, you can trade. You put your sell stop on the metal. Let's say the threshold of the breaker. You put your sell right here, stop loss here, and your first target is this low right here. This low. You see this low for 27 pips. It's gonna be a beautiful trade, And for people, me actually, I took the trade right here. I was too late because I was looking for the confirmation. I was waiting the candle to close to see the next candle was gonna happen, so I took trade faster. So this is the first thing. So if you wanna use the unicorn model, you need to have this confluence. I don't know the confluence. You need to have this 3 stuff. Maybe it's 4. The first thing you have. Wait a minute. Wait. You have the breaker. No. Wait. The tartar soup. Okay. This is the tartar soup. This is the tartar soup. after touching a beautiful order block before. Maybe sometimes not touch an order block, you know what I'm saying? But a high probability that it's gonna touch an order block or a supply. I don't I don't use this supply and demand term, but it was a framework that let the market change her statement from sell program to buy program or vice versa from buy program to sell program. So here we have the total soup, okay, and you have we have the breaker, okay. So it's gonna be a confirmation that the market change from buy program to sell program, and don't forget the minus sign because you know it's gonna be we are in the sell program, and you need to find a beautiful fair value gap inside this. All right, so here we have this fair value gap. Actually, I was using another you know Euro USD here using with FX SM. I was using Onda. So this is beautiful for value gap. Okay, so you took your trade here. Okay, so yeah, but I think that's not beautiful because you know the market keep trading higher. So that's I think this is the idea about the unicorn model. Like you need to find total soup, breaker, and inside the breaker for value gap when you take your trade. But here I think is not a very like you know to the thick. I'm looking for this trade like to the thick as you can see here because you know look at this wick trade higher. So I want to change. Wait, stay here. I want to change the Euro USD pair. Wait a minute. Let's choose this yonder. Okay, now, now, now we will see. Okay, okay. This is how I took my trade. This is the I was using this yonder. Okay, we have a breaker, total soup, consequence crashment of fair value gap because I was using the fair value gap. I didn't see the breaker till now. That's why I'm explaining that you have a different tools to trade. You know, I was looking at this trade on A30, as you can see here. Okay, A30, of course, using New York time zone. So it's gonna be like New York session. So I took sell. So yeah, that's it. So let's try to make a resume. Okay, and delete this. So for people who want to use that model, we call it unicorn. So the first thing you have a total soup, which means grab of liquidity. Okay, total soup. The second thing is the breaker. That's the breaker minus sign, and inside the breaker you will find a fair value gap. It's the fair value gap from here to here. Beautiful fair value gap. Okay, and you take your sell limit from here. You put your sell limit. Okay, oh here, wait, here, yep, and oh shit. Okay, stop loss right here, and the first TP is here, this low right here, and the second TP the other sell liquidity. But for me, I closed my trade right here, and the trade was here. Okay, so yeah, that's it. This is for the day trade, and yeah, thanks for watching. So try to backtest, you know what I'm saying? Watch my previous video. You're gonna see how I took my trade here, my buy trade, and you're gonna see why I I missed the trade here because I was using lower time frame. Okay, I didn't use the 1 hour time frame before the CPI news release, and I lost trades right here. I was looking to buy, you know what I'm saying? I lost two trade right here. I took a buy here and buy here, I think. Then when I saw that, after taking a buy here and here, I saw that we create an equal highs. What does mean when we create equal highs? That the market, I was looking that the market is going to trade lower, then in reverse to take this equal highs. But look at what happened. Market trade lower, kick me out, and boom, then reverse to get this equal highs. So every time you're seeing equal highs, which means that the market's going to trade higher to get this equal highs, and boom, trade lower. Okay, so that's it. So I hope it's gonna be a beautiful video. You're gonna enjoy it, and I hope I shared a beautiful emotion. What the fuck? Beautiful emotion. Damn. Kinda beautiful vibe of teaching. Damn. I don't know what happened to me. But yeah, that's it. Thanks for watching, and see you next week. Stay tuned, be positive, and yeah, be strong. Goodbye.